Hey guys, welcome to the Investor's Guide of Memphis Real Estate. I'm your host, Dean Harris, and as always, I'm with Douglas Skipworth. How are you?
Hey man, doing great.
We're bringing you this podcast to give you the boots on the ground knowledge to be a successful real estate investor here in Memphis, Tennessee. Please like and subscribe to the Investor's Guide of Memphis Real Estate wherever you listen to podcasts, our YouTube channel, Spotify, Apple Podcast, wherever you listen. Show sponsored are listed on your screen below. We would not be able to do this show, run our rental business without these guys. We've got Triumph Construction, River City Title, Corland Financial, CrestCore Property Management, and Will Griffin with Griffin, Clift, Everton, and Mashmeyer. I help buyers and sellers every day. Dean at CrestCore.com. If you have any questions about any real estate in Memphis, buying or selling, we can also get you that buyer profile link, Dean at CrestCore.com. How you doing?
Great.
Yeah, man, it's exciting times.
Absolutely.
Summertime rate drops. We're getting on the verge. I know. So I thought today, let's talk about what do you do when the interest rates come down. We are going to see some interest rate drops here in the next few months, definitely going into 26. I just thought let's throw out a few pointers and ideas of some things. What comes with that, what to expect essentially is
okay. I like that.
What we're looking at.
Yeah.
One thing, the first thing that popped into my head was more buyers. There are going to be more people enter our real estate market in the next 18 months that are in it now. I don't know comparison to different time frames, but I can promise you, according to the National Association of Realtors, every quarter of a point that the interest rate drops, 4 million buyers enter the market.
Wow.
So, that's across the country. But so if it drops a half or 3/4 of a point in the next, 6 to 9 months, you're looking at
a lot of buyers,
a pretty decent flush of buyers.
And I think to your point, I mean, I didn't think about it, but it's probably been 2 years that the rate since it went up so fast, plateaued, and I think they ticked it down.
So if you remember in 23, the summer, it started to late spring, early summer of 23, they really began to shoot up.
Yeah, and so I think there's going to be a lot of psychological relief when people see the rate go down. When the Fed comes and says, "Hey, we're going to lower rates," man, it's going to feel good.
Well, yes, and it'll feel great. There's a relief factor there because there's so many people on the sidelines waiting to do stuff on the rate. Refinances particular. I mean, there's other investors that are doing that. So there's going to be a side, And I think more buyer, it's going to be like, I can just see like a peace of mind, a psychological factor that's going to help people get excited to get back in the game because they've been pent up waiting. Your spreadsheet's going to look a lot better. It'll be a little easier. You won't have.
You'll cash flow better on the deals.
Yeah. Not as much red when you're pushing enter on your spreadsheet. I mean, there'll be more options. So what that means is there's more deal flow. There'll be more opportunities for you. But the first thing I thought of was there's going to be more buyers. Yeah. Second thing I thought about with more buyers, and just a simple economic class you could take is the prices are going to go up. If more buyers enter the market, sellers aren't dumb. They're going to realize that there's more competition out there from a buying standpoint that they're looking for, and prices are going to go up. We went through this in 22, going into 23. We went through all of this. When rates went down, 21 and 22, we were sitting here on this podcast, essentially taking orders. I talked about it. They're buying houses right and left at 4% interest rate. Hell yeah, everybody was. So will we get back to the 3.5% rate? I doubt it. I don't know that we'll ever see something like that again. But will we get down into the low fives?
That'd be great.
Yeah, I think you can over a period of time. So you're gonna start seeing
because you're 6.5-ish now. I mean, it's not that far.
No.
It's not that far.
So if we get down to 5,
it feels like a long way.
Feels like a long way.
So when you get there, it feels like you've come a long way, which is, I think, what's going to lead to the excitement. The more buyers, which is going to lead potentially to the higher prices. And I can see that. I mean, think about the sellers who are waiting to get more right now.
Oh, there's a lot.
Yeah.
And there's a lot. There's buyers that are waiting. There is a group. So there's a group of people buying now. I mean, we're closing 36 deals this month. So
awesome.
I mean, there are people buying real estate in our city right now. What I'm trying to tell you is that when this rate goes down, some of those cash buyers and people will step out, but there's going to be a whole flush of people that come in. And for the short period of time, we talked about this in the last podcast.
I was thinking about that too.
For the short period of time, you're going to have an opportunity to where you can buy a home that is still fairly, the price has been kept down. I hate to use low, but is it a fairly low price compared to where it'll be in 12 months if the rate drops a point? It'll be up another 10%. You can count on it because more people can afford it. Mm-hmm. So we're in a pocket right now, and I think that's what the guys because to be honest with you, the guys and gals that are buying right now are experienced investors. And they're buying right now knowing that.
Getting ahead of the curve.
Yeah, they're getting ahead of it because they realize that the rates are going to come down and they can refi later, but the price of these is not going to I did this in 23.
The price isn't going down.
No. God, no. Those houses that I bought in 23, I will tell you, and we've talked about this, that was not easy to carry from here to there. But the money that I've saved on the 16 houses that I bought during that time frame, it's going to be amazing. The equity, the forced equity that we'll have in them already, just by this rate coming down again and going back up. Yeah, I paid a higher rate for 14 months or so that I didn't want to.
Because the purchase price that you were able to purchase those houses for was too good to pass up, if I remember.
I was buying a 3.1.5 and 3.8118 that was brick for about 75 grand, 80 grand that needed 30 grand in work. So I'm all in at about $110,000, 115. On some 3.1s and 3.2s and some really great zip codes that are brick and great. Yeah. Now I paid more. The cash flow was really low. So I mean, they understand what I did and what I went through, but I'm getting ready right now. The rate is coming down now and the cash flow is going to be great.
Because you're going to refinance. And you had a little bit of equity in there when you purchased in Bird or refied or rehabbed. Yep. And now there's going to be even more equity when the price increases.
The bank's going to look at it and be more excited about it. And of course, I don't borrow anymore against it. Yeah. I just whatever.
The loan to value is going to be better, which might give you a better rate with the bank potentially. Not to mention the rate's even lower. Hey, good.
So it sounds like it's going to work here. And
you've been listening to this podcast.
That's the craziest thing, isn't it? But I don't, and that's what I'm kind of the people that are calling me now and getting on the phone now. That's what we're having that discussion. Hey, it's not the greatest rate you're going to see right now, but man, these prices are going up from here. They're going up from here. So it's that is one reason why I thought about this today, and I was trying to think about our topic and like what is relative at this point, and that's it. Getting yourself ready and knowing what comes with interest rate drops. The third thing that I thought about was easier to finance deals. You know, expect a good side of this. It's gonna be easier to finance. We mentioned this lightly at the very beginning, but your spreadsheet's gonna look cleaner. It's gonna be more green than red. You're gonna be able to look at more deals and have more deals be options for you. It's just going to widen, and which in turn brings them more buyers. So it just widens that gate of entry. Let's see, inventory will go down again, and then likely pop back up. So this is a little delicate one. We're continuing to add inventory now. We're in a situation now where last month or the month before, I think we left 300 more houses on the market than we did a year ago. Is that correct? Was that your number, or the prior month?
The prior month. Yeah. So just a few weeks ago, we talked about this, and it had been, I think it was May to June. It was like 300. And then, so since that time, the new stats have come out. Okay. In July, it was another almost 100 houses. So it was another 3%. So it's over about 33% for the year that we've added in inventory. In the last over 1,000 houses.
We've added 400.
Probably 10%. Yeah, over 10%. In that time period. But this is what we keep talking about, and I think we're part of where you had just said. The prices are still slightly higher.
Yeah, but I tell you, you can get a deal. You can get deals off the MLS right now.
Yes.
We're offering much lower. You can get a deal right now. Yeah. I'm telling you. It's not, you might not think it's a great deal right this second. In 12 months, you're going to be like, whoa, that was a deal. Whoa, man, that was a deal. That's why savvy investors are in there buying now.
Taking advantage of the opportunity, getting ahead of the curve, as you said.
It takes a long lens to see it. It takes a lens of experience to see this. It also takes a stomach of, a little iron stomach-ish, because you're not going to pencil out the absolute best number right this second. Concentrate on where the home is at, the kind of area that you're buying in. Is it a brick home? Is it, look at the actual property. Take the numbers outside of it for a second. Do you want this in your portfolio?
Yes.
Okay. So if you want this in your portfolio, is there a way to make it work right now? Yes.
Maybe.
Let's just assume
Yeah,
yes.
yeah.
Yes. Okay. Then let's go buy it because things are only going to get better.
Yeah.
The rate's going to go down. The value's going to go up.
And we've talked about this too. That example you use of the young guy who was looking out 10 years.
Man,
so it's like 10 years. That's what you're pretty much saying right now. If you're a long-term investor, now is the time for long-term investors to invest for the long term.
Mm-hmm.
If you're investing for the long term, now is the time to invest for the long term.
About 4 years ago, the guy came to us and was buying $220,000, $30,000 houses that were renting for $1,800, $1,900. And I was like, hey, man, I understand good market, good tenant, but what are you doing? And there's better deals, especially if you're paying cash or if you're getting a small loan or what have you. He's like, he was 24 when I spoke to him. Big stockbroker guy, was extremely smart. He said, well, I'm holding these for the future. I'm not ever going to get rid of these things. And I've got a fixed cost initial break into entry, a fixed cost, what do you call it? Like a fixed entry cost, essentially, because the purchase price of the home. Yeah. He said, but then everything else from that point just gets better.
Okay.
He's like, so my rent over in Memphis every 10 years is going to go up 30%, which is true. Now, it won't be 3% year over year, but in a 10-year stretch, we go up 30%. And then he said, no telling where your value is going to be, but at least another 30 or 40%.
Yeah.
So in 10 years, his $1,800, $1,900 rental is going to be a $2,400 rental, $2,500 rental, and his value from $220 is going to be up in the $300 plus range. It makes perfect sense.
And he financed it, so
he could cover it short term, and then if it gets into a much better scenario later, he can do it. And if not, he's building that long term wealth. So if you can get it into where it pencils now, then get it in now. If it's going to be in your portfolio.
Yeah.
Don't look to make money off the first one. What are you going to cash flow $150, $200? Best case scenario anyway, right? What are you doing with that? Yeah. So the point is like, just get it to where it works.
Yeah.
Get it into your portfolio and then things are going to improve. I wouldn't do 50 like that. Yeah. Right. Yeah. I'm not advising you to come in here and buy 4 a month for the next 2 years that way, hoping everything's going to work. 10, sure. Yeah. 8, 9, 10 over the next 12 months. I have no problem telling you that working it out now from a spreadsheet standpoint, it's only going to get greener.
And I think one thing we neglect in the short term is thinking, okay, rents are where they are. Yep. Although I would say two comments to rents is a couple months ago, we had a podcast episode where we referenced that the rent rate in Memphis is the highest it's ever been. Mm-hmm. In rents, and we've talked about this over the years, that rents are a function of income. Mm-hmm. People typically pay about a third of their monthly income for house cost, house expense, and whether they own it or whether they rent it. Mm-hmm. And we're getting in prep. Be ready. Zip code challenge, zip code breakdowns coming soon to a podcast near you. I've been doing some prep and looking at the income for the zip codes like we do, and almost across the board, the income has increased.
Okay.
So all that means is that rents will continue to increase as income increases. Yeah. So just don't forget that in your variable. Yeah. That when you're buying for the long term, rents aren't going to stay like that guy at $1,800. No. They're going to be at $2,500. They're going to continue to go up.
So inventory is going to go up. We're going to have a spike in inventory like we're seeing right now. You're going to have more options and see more options. I do think once this rate ticks back down again and we get back aggressive, you're going to see some of that go back down again. I just think we'll teeter-totter.
Which part go down?
I think the inventory is going to go back down after it comes back up here because you're going to get so many people that are going to get right back into it. I think it's going to go up for the next 6 months.
Yes.
And then we're going to turn around and there's going to be like there's going to be a swing where that interest rate catches like, oh, and now there's more people are going to come into the market and they can make these deals work. It's going to go back down, which will make prices go up even more.
Yeah.
I mean, like either way, the prices are going to continue to go up. So I don't have any house. By the way, I haven't bought any house that I have no investment properties that I bought
that are worth less than that you paid for them.
I don't have
or that you're
one.
in them. Yeah. No.
Do you?
Mm-mm.
No.
Mm-mm.
I don't have one single one that I bought and I'm like, oh crap, I bought it for 100. I can't get but 80.
Yeah.
There's nothing like that. So that's my point. It's like things are going to continue to rise. You're seeing all the indicators. I'm telling you, I bought my first one in 15. That's to 10 years ago. I don't have one that's not worth it. You're 25 years into this.
Yeah.
You don't have one. So that ought to be some kind of indicator to you that not just this is new information for Memphis. This is what's been holding. We are continuing to grow.
What can people do to get ready and get for this drop? You said what's going to happen. What can your buyers be doing right now to get ready?
I would begin to look at every deal you can. I'd get that buyer link filled out. We'll send you every single thing that we can. With maybe Alec can put that link here on the bottom. I would start there. You're educating yourself on the Memphis market. You're seeing what's coming out.
They fill out the link, and then you will send them deals daily.
Based on the questions that they answer or what they're looking for. Whatever we find that's source for you guys is what we send out every day. Yesterday, we sent 7 properties out.
And so they'll be able to do some analysis and get ready.
Yeah.
Maybe make offers.
You can make offers. There's a whole instructions to do all of that. The very minimum I would do right now is to get on the team and start to look at that. Secondly, we've talked about build your team. You get your financing in order. We need to talk to CrestCore Property Management and figure out where, to buy, things like that. So,
but if somebody's new to listening to this,
yes,
and they're thousands of people come into the podcast every day that knew, what can they be doing?
I would get that buyer link filled out, and I would start to look at the market and start to look and see, hey, what are they sourcing there? What does this look like? Maybe 1A to that is get your bigger pockets calculator out or your deal sheet out and start running your own numbers and start looking at seeing if maybe this would work. And then maybe use a lower interest rate and see what that might look like later. Because that's the next thing that would come in. But that's what I would get ready for some activity. I would just get yourself prepared to, if you're an investor and you're getting into this, to see activity and action from all sides. There's not going to be an alarm where somebody pushes a button and here we go. But over the next 6 months, you're going to start seeing that engine churning a little bit more and a little bit more. And then you're just, all of a sudden you'll look up and it'll be March and we'll be slinging deals at 5%. And you'll go, man, I wish I'd have listened and bought 2 or 3 before this thing got out of hand. That's kind of what I'm saying now. And for the 36, 35, 34, 36, I can't remember, people that are closing deals this month in August with our team have heard that message.
Yeah. They're loosened and ready and warmed up. They're not coming from a standing start in March. They're getting ready. Okay.
Appreciate you, man. Anything else on this?
That's great.
Thought we'd bring this. Rates are coming down, guys, so we thought we'd talk about this today. Good information. Dean at CrestCore.com if you have any questions. Anything else?
Nope.
All right. See you next time.
Bye.